Prop firms have taken the trading world and community by storm the past couple of years, some offering hundreds to even million plus dollars of trading capital at your disposal as long as you can pass an evaluation phase. But are prop firms good, bad, or are they worth it for you? That's what I want to dive into a bit more here in today's video. As someone who recently has contemplated this prop firm and even signed up for one, has been using one recently, I think I have some thoughts on this, and we're going to start with the bad, then we'll get to the good. Now, inside of the bad, here we go. First things first, My Forex Funds is a recent retail trading prop firm that is under major fire. They've been accused of a lot of things, not only taking the opposing side to customer trades, but they were accused of minimizing the probability of its customers' profitability with pretext to terminate customer accounts, misleading assessing commissions to reduce customer account equity, and using manipulative software to execute orders at the worst possible prices. Now, this type of stuff, as much as it sucks if you were involved, it's bad, it's good because we need this to happen to regulate the industry. If this doesn't happen, there will be more companies that do shady stuff like My Forex Funds. And I'm sure that this will continue to happen, but potentially to a lesser degree. We'll see. But they were able to generate over $310 million in fees from a customer base of aspiring retail traders. So yeah, that's not ideal. That's definitely not ideal. But if you do your research, hopefully you can find a backed and highly rated prop firm that are not having tons of customer complaints and hopefully not partaking in things like My Forex Fund. Another piece of the bad that there are trading rules. There are rules you may have to follow, which could be a pain. On top of the rules, there's even profit splits. So for example, some of these prop firms will have a 70% profit split. 80% is pretty consistent. Now there's even some at 90, and then there's even some with 100 apparently. But when it comes to a profit split like that, you need to make sure that that is factored in to your original thought process and your whole trading, plan. You're not going to be taking home all the gains as you would if it was your own money. But on the flip side, they are offering you capital to trade with as long as you can pass the evaluation. So there's pros and cons. Now, with some of the rules, there could be rules like a trailing drawdown. So you can't drop by more than 8%. So let's say you are trading your account and you start with a $100,000 account. You get to $105,000, $106,000, and their target is 110. You get to 110 without hitting your trailing drawdown or hitting your max loss in a day, we'll give you a funded account that you can trade. But then all of a sudden you go into a period of time where the market's not aligning with your strategy, you're just not figuring things out, or you have no strategy and you're just throwing random shit at the market and you're just seeing what sticks, and you fall from 108 to 95K. You can get wiped. So you have to make sure you're aware of the trailing drawdown. Some of them are 8%. I've seen 5%. I've seen 10%, depending upon the platform, the prop firm, and the different stages to how they work things. But you have to be being aware of that. And it could be a pain. But I really think, for example, for me, it's not a big deal. If you're trading with large size, it could be a pretty big deal. But if you're trading with a appropriate size and you're being responsible with what you're doing, like realistically, if you've got a profitable strategy and you have learned how to handle the fire in your hands at your fingertips, you'll know when to push, when to not push, and you'll have sizing dialed in. Like, these things are all things that you probably should practice and have a plan ahead of time before you pay a couple $100 to get an evaluation at a prop firm and not have these plans in place. That's what I've done. I personally have built a strategy for the past 6 to 8 months that is working for me. And now I'm just moving to a prop firm. And so far it's been pretty good. But the reality is that had I done this way earlier, I would have hit the drawdown and I would have been knocked out and I would have been, in the hole a couple $100 pretty much right away. And now I have a plan in place to where I should not ever have that happen. Of course, it could happen. Anything could happen. The market's never certain. But I should not have a situation where I lose 25 trades in a row and I hit the drawdown, if that's the numbers that it happens to come out to be. So more of the negatives is that you don't really have full control over the brokers that you are trading with, and you may be using MetaTrader 4, MetaTrader 5, these different apps, which you may not be used to. If you're in the Forex space, future space might be more familiar with them, but those are apps and platforms that you may need to get familiar with, which could be different from what you use. Again, if you kind of have been in the game for a while, you have a good feel, but there's the learning curve with a new platform and a different broker. There's even potential issues with trading products. No options for most of these. Most of them don't allow you to trade shares. If they do, it's CFDs. And if you do trade CFDs, there's generally a smaller list to choose from, which could be a pain. So all of these things do add up and stack up into pieces that you need to be aware of when choosing and moving forward with a prop firm. Last piece here is that there is the potential for it to literally be an endless money pit. And I say that because you could fail an account and then they say, hey, come back, we'll give you a discount, we'll give you 20%. You try it again. And you just spend hundreds of dollars trying again and again and again. And when I say endless money pit, eventually your money would run out. Like, let's say you were trading your own money and it ran out. Like, let's say like when I got started back in college, I had $200-300. I put it in and then I was like, let's see what happens. Eventually that money would have run out if I was on a massive losing streak. Luckily I wasn't. It was also pre-pandemic and then the pandemic happened, so I was able to build a nice cushion. But I could have ran out of money pretty fast and then I was like, okay, I'm done. Like, I have to save up money to put more money in the account. Or now with the prop firm, just pay more, pay again. But the problem is that you can put it on a credit card. So because you can put it on a credit card, you can technically just kind of go into debt to become a profitable trader and never get there, and then have massive debt and then have credit card debt at 30% interest rate, and now you're fucked. So you don't want to fall into that endless money pit, which I'm sure there are people that are falling into that. So that is something to be taking serious. Now let's get to the good. One, it's not your money, so it's kind of cool. So for me, it frees up my capital, which is a pretty big piece to the puzzle. I really enjoy how now I've got capital that I can use for other things. And right now, with rates where they are, and I have loans that I need to pay off or that I'd like to pay off faster, I can essentially say, okay, well, let's pay off some of these loans a bit faster now, or take a nice chunk and put that down on these, because I have my trading capital essentially with somebody else. And if I prove to them that I am consistent and profitable, they'll give me access to this money and I could trade their money and get a 90% profit split at the prop firm that I'm using. This also could be a cheaper way to learn your lesson. If you are someone who's coming to the market with a couple $1,000s, even $10,000 or more, you could easily blow that in, a couple months or a year or less. We've seen it happen many times. And if you were trading with a prop firm, you may lose less money because you can pretty much pay a couple $100s for these, $50K, $25K, $100K accounts. And if you can never pass, well, you throw a couple $100s at it, maybe a couple of times, and maybe you lose $1,000 or $2, versus blowing 10, 20K of an account that you might have sitting around, or that you might have saved up that you want to throw out the market to get started. This could save your ass. The trading rules can also be a positive because it could force you to have proper risk management. So there's a negative and a positive. I see both sides to the trading rules. That could be a positive. And if you look at it from, I think, a mature perspective of like, hey, these are here for a reason. It's protecting your downside, their downside, and also, like, realistically speaking, if you were to be a professional trader, you probably shouldn't be seeing massive account oscillations up and down. Like, you're going to have your blips, but those blips should be controlled, and then they should be able to be made back with proper risk management over time if you've got a strategy and system that works and you're like actually a professional at this, versus just some guy who's trying to make some extra money on the side. Last piece here, no more small account challenges. You can see them as good, cool, like, oh my God, this guy took $1,000 to 100K, like he's so cool. The reality with those things is that they are so risky, and how many motherfuckers lose it all, don't show you, try it 17 times, eventually hit a big trade and go, oh, fuck you guys, look at me, I made a ton of money. Sign up for my Discord course, this, that, here, buy my shit. No more dealing with the small account challenges. And we all know the reality is if you've ever tried them, it's not as easy as you think. You may have done very well. You may have had success. But the reality is that most people are not going to have the success that you might see on social media. And again, take it with a grain of salt, because that person probably tried 75 times to get that one result, and eventually shit's going to work. Some will say that, hey, if I only had 50K, if I only had 25K, if I was past the PDT rule, man, it'd be so much easier. I wouldn't have taken as much risk. It's true. I mean, look at from my perspective, moving from options of my own money to a prop firm where I can casually throw 50K at a stock. I threw 50K at SPY today and made $100. Like, I couldn't do that before. I didn't have 50K in my account to throw at SPY to play shares to make $100. Like, it just wasn't worth the risk to put that much in there. Like, it just doesn't make sense to me. So I was playing SPY options, which then have decay and like all these other features and all these other factors that could mess with you and could throw off the P&L and could throw off your strategy. So that, to me, is nice. I could trade stuff that moves a lot slower, cleaner. I could swing trade some of these things and not have to worry about decay and the overnight effective option. Like, none of that stuff matters, you know? So all of this stuff, I think, factors into the good, and that's what I decided to go with one. And really, it was a move away from options and into shares, CFDs, and the broker that I'm using. Essentially just trading shares of some of the popular stocks, which is what I trade anyway on options. And now no longer having to worry about options. And all I have to worry about is price action. And that's it, which is pretty darn nice. The platform that I use, this is not sponsored by them, is Third Trader. Again, this is not like I'm plugging them. I'm just saying what I use. I will leave a link below for transparency purposes, but realistically, like, if you trade a certain style or way, like, you need to find the prop firm that works best for you. I researched a bunch, and this one happened to be the one that seemed to fit pretty well. I was able to get a 90% profit split. I was able to trade a pretty decent collection of large cap stocks that I could swing trade and day trade, the ones that I would do anyway. And that's all that I need. So they fit what I need. I don't give a shit about, Forex and crypto or futures as much. I'll still dabble with futures if I want to play overnights and whatever, to minimize the effects of holding like SPY overnight. Like, I'll play a micro mini future, get a couple contracts, put a stop loss on it, and then just let it play out if I'm going to ever do an overnight or a swing trade on the S&P or something. But that's what worked for me. There's a lot out there. There's a lot of good ones out there. I'm sure there's a lot of bad ones out there. Just make sure you do your research. And at the end of the day, if it's something that makes sense for you, those positives could outweigh the negatives to a prop firm. Thanks so much for watching. Thumbs up button, consider subscribing, and I'll see you guys in the next video. Peace.